When y'all gonna start paying attention? The money king is here. I've been telling y'all and I've been giving y'all the game for so long. And the one thing that I know is that my methods work because I pay attention to the things that other people are not looking at. You trading on meme stocks. I'm trading on real information and paying attention to the reports. I'm looking at the sales. I'm understanding, hey, they're not making money on this thing, but their subscriptions is going down and they get more competition and they don't have the capacity to even be able to deliver on these things because of the logistics. And they just hired this guy in order to run this division. And this is what they pay into. And this is what their debt to income ratio is. And this is how much credit they have outstanding. And they're trying to raise more money here and all of this other type of stuff. And you talking about a meme stock. I told you guys. Did I not warn you? What did I say? When I was going back, if you are not a part of the Patreon, I need you to join the Patreon today. I told y'all the things that you look for when you look into invest in a company. I called Peloton. I called Zillow. I told y'all. I warned y'all. I said, listen, I seen the writing on the wall a long time ago and I got out of Peloton stock. When Apple Fitness Plus and all of these other companies started going to subscription-based models and they started adding a lot of different things, I said Peloton's best days are behind them. I told y'all. Well, Peloton reported earnings this morning. We got a full show. It is going to be absolutely awesome. But I warned y'all. I absolutely warned y'all. Yep, I did. Did I not? I did call it. I called it, ladies and gentlemen. But let's get into it. So let me tell you exactly what's going on. And then we're going to revisit the conversation that I had with you guys about how I called it and what exactly happened, right? What exactly happened? Hold on. Let me make sure that that's exited. What exactly happened with the whole Peloton fiasco? All right. So Peloton, ladies and gentlemen, let me move myself out the way because it's necessary for us to get to this bag this morning. Peloton, ladies and gentlemen, shares collapse as momentum for its home equipment slows. I told y'all. I warned you. I said Peloton is going down. Down. You ain't never seen me. Meanwhile, Ford is going crazy. Ford is going absolutely ape-s in the market. You know who else is going crazy? ASML. Neither here nor there, but let's get into it. Peloton shares were down more than 30%. Ooh-wee. Oh my God. 30% in pre-market trading Friday, on pace to hit a 17-month low after the at-home fitness equipment maker slashed its annual sales forecast by as much as $1 billion. Y'all gonna start listening to me. I am the king when it comes to finding the right investments, making the right plays. And when I've been telling y'all, I've been preaching it to y'all, I've been beating y'all in your head time and time again. Yo, you need to look at these things in order to be able to identify the right companies to pay attention to. Look in the weeds. Listen, when this press release come out, this is what you need to look for. Don't focus on that. Focus on this. This is what they're saying, but this is what their competitors are doing. And this is what the management is saying. And this is how they're positioning themselves. And this person is leaving it. I've been telling y'all. At least 4 Wall Street investment firms downgraded the stock after Peloton's dismal fiscal first quarter financial report released yesterday. All right. While the company and its share price experienced incredible growth a year ago due to stay-at-home trends sparked by the coronavirus pandemic, the momentum is fading and more consumers are heading back to the gym. Planet Fitness, for example, said Thursday that its membership levels are almost back to pre-pandemic levels. That stock hit an all-time high on the news. People are going back to the gym. In addition to that, people are subscribing to different platforms like Apple Fitness Plus, in which I just go straight downstairs to my gym. Every single day, I'm right downstairs in the gym. But I warned y'all, they cannot compete long term. They tried to move to a subscription-based model because they were having problems with their treadmills and their bikes. They don't even make money. Listen, if you start to really dig into, let me start kicking. Let me do what I do. If you start to dig into the financials, right? If you start to understand these companies, you realize that they don't even make money off the bikes. They don't make money off the treadmills. They don't make money off of any of that. Those are loss leaders in order to try to get them to, or to get you to subscribe. And they're trying to largely tie the subscription-based classes to the treadmills themselves. And that is the way in which they're trying to generate revenue. But you can't keep up because even the music that they're going to have on these platforms, they have to pay the content creators for them. They have to create strategic partnerships. Meanwhile, you got Mello and all of these other celebrities on my watch every day, on my Apple Watch every day, walking with me and doing my elliptical with me and doing training classes with me. And it's all coming bundled along with Apple Music and Apple TV Plus and all of this other kind of junk. And iCloud. If you didn't see this coming a mile away, let's continue. From forecasting consumer demands to accurately predicting logistics costs. Look, now it's the logistics costs. Our teams have never seen a more complex operating environment in which to guide our expected results. Yo, y'all got to be able to see through it. He added that Peloton has seen traffic to its website taper off faster than the company was anticipating in recent months. Shoppers' visits to its brick and mortar stores also underwhelmed. I'm going to do a masterclass on stocks. First, the Patreon exclusive video that I'm dropping has something to do with something else. So it's an upgrade that's going to happen, but we're going to get into that. Make sure y'all join the Patreon, pinned to the top of the chat, and it's in the description. Putting even greater pressure on Peloton's profits, the company cut the price of its original bike by 20%. So not only was they not already making money off the bike, they wasn't making money off the bike before. Now they cut the price 20% just to be able to get more people to buy, to get the gross sales up, which doesn't necessarily feed into the net revenue in order to hopefully boost their subscription price. And then maybe they can sell the company to somebody else. That's really what the objective is, in my opinion. Listen, I'm not giving you advice. I'm not a financial advisor. I'm not a stock picker. I'm just telling you what it is that I think personally. Let me throw that disclaimer out there. Let's continue, ladies and gentlemen. Let's see. Executives said Thursday that the reduction helped the accelerate bike sales, but that also means fewer people are choosing to buy the expensive Bike Plus. Considering its revised fiscal 2022 outlook, Peloton said it's looking to make material improvements to its cost structure, which includes significant adjustments to its hiring plans. I was just about to say it before I even read that last part of the sentence. That means they're going to be firing some people. They're going to be merging divisions. They're going to be reducing the amount of heads that they have working for them. And they're going to be strategically placing people in other positions, meaning layoffs is coming. All right. More opportunities at McDonald's, less opportunities at Peloton, ladies and gentlemen. With the ongoing economic reopening and rising logistical costs. Now think about it like this, though. Also take this into consideration, y'all. People are spending more money than ever to buy the things that they want. Sales are out the door. You cannot even get on the waiting list to buy a car. You can't even get a freaking car. Sales is out the door for everything. If you can figure out how to hire enough staff, you are going to get rich. And these people are having problems selling their bikes. That should be a red flag for you. Take a few quarters to get back on his feet. Take a few years and hopefully sell the company. Downgraded his stock price to $68 from $120. That's almost, not quite, almost a 50% downgrade on its stock price. Woo-wee. Listen, ladies and gentlemen. Listen, Linda. I called it. I told you. I warned you. I told you to get the piss out of that stock. You didn't listen. You sat there and said, but all of my friends are buying Pelotons, and so I want to stay in the stock, and I think it's going to go up. I warned you. I told you. I said what you need to listen to. I asked you to join a Patreon, and now you sitting there holding a bag of bricks, and your portfolio was taking a hit because you did not listen to me and you tried to do things your way. When y'all going to start paying attention? The Money King is here. I've been telling y'all and I've been giving y'all the game for so long. And the one thing that I know is that my methods work because I pay attention to the things that other people are not looking at. You trading on meme stocks. I'm trading on real information and paying attention to the reports. I'm looking at the sales. I'm understanding, hey, they're not making money on this thing, but their subscriptions is going down and they get more competition. And they don't have the capacity to even be able to deliver on these things because of the logistics. And they just hired this guy in order to run this division. And this is what they pay into. And this is what their debt to income ratio is. And this is how much credit they have outstanding. And they're trying to raise more money here and all of this other type of stuff. And you talking about a meme stock. And Mills said you can't get the refrigerator right away. It's on back order. You can't get nothing right away, but they can't give away a bike.